Hi, this is Alessio. Hope you're well. So once again, the yellow metal, gold, had a breakout from a trend line, and once again, probably for the third time in the last 12 months, it had a false breakout, a bull trap. You can see it drop back down again, drop back below the trend line, what we call a false break. So we'll have a look at this chart one more time, and also we'll have a look at this chart and explain how it could help us going forward for the next few months. Join me. Alright guys, welcome back. So many of you have been asking me to do an update on the chart of gold. So what I'll do in this video, I'll do my best to give you a quick summary of what I'm seeing here on the chart. So as you can see here, first of all, let me go on this chart on the weekly time frame. This is the weekly time frame, which actually shows it much more clearly what we're seeing here now. Notice that gold just recently broke out of this trend line, this resistance trend line you're seeing here, this yellow line, and once again, and I'm going to explain to you why I say once again, you'll notice here it broke out of the trend line, which typically can be interpreted as a bullish signal, but you can see once again it was a false breakout, a false break off that trend line, as you can see here. And you can see gold has fallen back below the trend line and is also below its 21 weekly moving average, which is not a good sign actually going forward. But notice this is not the first time this has happened to gold. In fact, just in the last 12 months, we've seen examples of these false breakouts. Notice about a year ago, gold did the exact same thing. It broke above a trend line, and then very soon afterwards, it dropped back below it, indicating a false breakout and indeed a bull trap. And notice in the summer of this year, gold did the exact same thing. It broke above a trend line, and then very soon afterwards, it failed to stay above it, and then dropped back below it. And over the next several months, it continued to drop even lower and actually tested the March lows. And here's the most recent breakout and actually the bull trap, as we can see here. So going back to this chart here on the weekly time frame, we have to remember, anytime we see a breakout above a resistance level, a trend line, for example, or indeed any kind of resistance, we have to remember there is no such thing as one single interpretation of a chart. Some people think there's only one interpretation of a chart if there is a breakout from a resistance level. That is not the case. There are many interpretations of any one chart. So whenever we see a breakout, for example, above a trend line, as we can see here, we always have to remember that it could potentially be a false breakout as well. We always have to remember the risks as well. So I think the fact that gold failed once again, probably for the third time in the last 12 months, to stay above a trend line resistance and drop back below it, and in fact now it has gone below the 21 weekly moving average, again, it's a negative sign. It's not a sign of strength, it's a sign of weakness. And the question is, can it remain above this level? This is the next key support level, 1750. Okay, I want to show you this chart of gold seasonality, and here's why. Because there may be a question as to when would be a good time to get bullish on gold. When would be a good time, for example, to get long on gold? Well, that depends. Firstly, as you see here, in the month of January, gold has the best performance statistically and historically. So, as you can see here, out of all the months of the year, the month of January happens to be the strongest month for gold. So one strategy which a trader could use is that they could wait until the month of January. By the way, December is not that bad either. December is also typically bullish, but as you can see here, January actually has a higher probability seasonally to be more bullish. Again, usually the beginning of the year typically has a bullish bias for the yellow metal, for gold. So that means if in the first couple of months of next year, in 2022, if in the first couple of months, let's say January or February, okay, if in that period gold is able to break out above this resistance, you can see here, let's say it manages somehow, by the way, this is a line chart of gold, so I'm using closing prices, and I've drawn this dashed trend line you can see here, plus this resistance level you're seeing here at 1830. Okay, 1830 is the key resistance level, one of the key resistance levels for gold. If in the month of January, gold is able to manage to get above 1830 to 1840 resistance, which is this level you're seeing here. So if gold is able to, in the month of January to February, get above this resistance level, again, 1830 to 1840, assuming it stays above 1750. Okay, because below 1750, then forget it. The odds would be reduced. But provided gold remains above 1750, and if in the month of January it manages to break out above this box level we're seeing here between 1830 to 1840, then a breakout above this resistance level here, again between 1830 to 1840, could actually be a bullish sign for gold if it happens in the first couple of months of next year, between January to February, because remember, that period has a bullish bias to it. All right, guys, so that's really what I have. Let's see what happens. I'm not saying this is what's going to happen. It's an if it plays out that way. And as long as gold can remain above the support of 1750. Because below 1750, the odds would be significantly reduced for a bullish breakout on gold, and actually risk could increase to the downside if that support level breaks. All right, guys, so that's one strategy for approaching gold for the new year and potentially for the next few months. Thanks very much indeed. Bye for now.